Happy Thursday, everyone. This is Scott Welsh once again. And every Thursday, we get together to talk about how to beat market. Now, we're in the middle of a battle royale between indicators. If you get my Wednesday newsletter, you know that we talked about that again this week. And today, in this video, we're going to take it one step further. We're going to find out when indicators battle who comes out on top. Three things we're going to talk about specifically today. Are some indicators simply better than others? It's kind of a dubious thing, isn't it? Because what if you don't believe in indicators at all? Oh, wait. We've already talked about that. You should believe in indicators, right? But if you do believe in indicators, which one is best? Is there such a thing? Oh, that's number two. Thus, the battle royale. Who comes out on top when indicators get in the ring? And three, are there other challengers besides just the ones we've talked about, meaning stochastics and RSI? Are there others? Well, we'll find out. When, of course, we get to know me, this is our small segment where I give you pictures of me. Until I start doing these in front of the camera in my studio, I try to give you some snapshots. Here's me on early on a trading day. Just got some good news from my broker, and I was pretty pumped about that. So anyway, I thought I'd share that with you. Okay. First things first. Have we ended the argument as to whether indicators work or not? I mean, have we? We had some pretty indisputable evidence on the ES, which I feel like is a good battleground, right? Now, if we go to other instruments, we might have another discussion. But if we're really going to solve this problem and have this argument, what better instrument do we have than the ES? It's the S&P 500. It's a stock market, been around for a long time. We have tons of data. We have tons of different market conditions. So we're using the ES as the battleground. I suppose we could use SPY or individual stocks, but right now we're focusing on futures and stocks because we know that stock market has an upward bias over the long term. So if an indicator is going to work, I feel like it should work in that environment. So yes, we'll continue this discussion maybe on other instruments, but if we're talking about the ES daily chart, stochastics indicator beat buy and hold so badly that his mama couldn't recognize him. That's a little street trash talk. A little wild here on the webinar this week. All right. So that's done. Okay. We're done talking about whether indicators work. Let's move on. If we agree that they work in this specific arena, okay, are some better than the others? Well, my first thought is no. Indicators are all basically the same. All right. No one would put a bunch of indicators on our default packages on our platforms. And in the middle of all these free indicators that we get, in the midst of all this, one of them is better than another, right? That doesn't make sense. I mean, they should all be just about the same, and it doesn't matter. At least this is my thought. What's your thought? I wonder. Well, my first thought would be wrongo, right? Now, yesterday we were looked at in the Wednesday newsletter. Sign up on my website, get on that newsletter. Why wouldn't you? Yesterday we looked at the battle between RSI and stochastics. Now, RSI is my personal favorite, as I outlined yesterday. I've traded it live for several years now with real money. I just like the way it moves. I feel like it accurately depicts the market. I like RSI, but I've had the most experience with stochastics over the years. I've looked at that the most since the very beginning. So that's why the battle is between those two first. Okay. And what happened if you didn't read or didn't want to read or didn't care to read? Well, as long as you didn't mind that the RSI indicator trades a lot less over the decades, RSI won handily. RSI clearly was quote unquote better than stochastics. What does better mean? Well, RSI had more profit, a lot less drawdown, and a higher winning percentage. I mean, how do you beat it worse than that, right? If those three wins are significant, then there's really no other conclusion we can draw. RSI won handily. But again, it did trade less. So you always have to keep your personal preferences and your personal style in play when you consider what you're going to actually trade. Okay. RSI won in the battle of the two. Of course, this piqued my interest. Well, if RSI beats Stochastic, then maybe all of these indicators on our platforms are not the same. Are there others, right? Okay. Again, here's my first thought again. I thought your first thought was supposed to be right? Isn't that right? That's 75% of the time your first. Anyway, my first thought is this time, no, nothing will beat RSI. Why do I think that? Again, my personal trading experience and my personal research. I've built systems with all of the basic indicators, and in my historical testing, hypothetical, of course, just testing, that RSI was always my favorite, right? That's why I've traded live. So my first thought is no, nothing's going to beat RSI. So let's look at two more contenders, shall we? Next up in the battle is the momentum indicator. Okay, now, from an emotional standpoint, maybe even a common sense standpoint, the momentum indicator is my favorite. Well, why? Well, think about it. As traders, we want momentum. If it's named momentum, what could be better at giving us winning trades than the momentum indicator? This indicator was supposedly built to register a change in momentum. So why wouldn't this be the best indicator for traders? Am I the only one that thinks this, right? I've always wanted to use the momentum indicator, okay? So I put the momentum indicator to the test and I put it in the battle. Now, remember, I've said this a bunch of times, but keep it in mind. We're only using the ES, right? We can use other things eventually. We're using a sample hypothetical 25K account. We're only going long because of the upward bias. We're only using one contract, okay? So for all of the discussions we've had in the past couple weeks, we're keeping that the same, right? Although I did use 20,000 in an example, so I rounded up to 25. I'm not sure why. Maybe the drawdowns are bigger. I don't know. That doesn't really matter. Okay. Last but not least, we used a 60-day timed exit, meaning we get out after 60 days. No stops, no filters, nothing. Indicator fires off, hold for 60 trading days. Got it? Okay. We use the default 12 as the length for the momentum indicator and follow the rules of momentum indicator, meaning if it is above 0, momentum is up. Another reason why the momentum indicator is so fantastic. All it has to be is above 0. There's a little 0 line if you know your momentum indicator. Hey, rule 1, I didn't even write these down, they're so easy. Rule 1, is it above 0? Yay! Rule 2, does the indicator tick up in this particular bar? At the close, is indicator higher than it was in the previous bar? If it's above 0 and it's higher than the previous bar, guess what? Momentum is rising and we need to get in. 12 is the length. Above 0, momentum is rising in this bar. Let's take a look at the results, please. Okay. From 1998 to now, momentum produced $44,947. Pretty good. I mean, it's not great, but it's pretty good. However, it has a 41,787 close to close max drawdown. Whoa, that is way higher than the other indicators that we've talked about. That's almost a 1-to-1. You would almost have to suffer $1 of drawdown, max drawdown in your worst possible losing streak. You'd have to have $1 of drawdown for every dollar of profit you produce. That is kind of scary. In fact, it makes me say, yikes. It does create momentum, hence the profit number, right? But the drawdown, I don't know how you feel, but to me, it's atrocious, right? It's almost the same, almost as bad as buy and hold. And we know that the buy and hold drawdown was wild, 55,000, I believe, if you've been paying attention to the videos, right? Now, the momentum indicator does take more trades than RSI, but profit is slightly less than the market. The drawdown is higher. It's not great. And isn't it ironic that the momentum indicator isn't great at giving us trade momentum? Is it ironic to you? It's just me? Anyway, let's do one more. How about the MACD? We use the typical default settings 12, 26, 9. And guess what? When the MACD indicator went positive, when the histogram went positive, boom, at the close, we get in at the open of the next bar. Again, I thought it was so easy. I was going to give you trade examples on a chart, but honestly, do I? Well, let me know if you want me to show you a trade example, right? Momentum was above zero with one uptick in momentum. MACD is just goes positive, right? That's it. The MACD lines cross and we get a positive histogram. We go long at the open of the next bar. Okay. All right. MACD results. It's also not great. 44,000 profit, very, very similar to momentum. So MACD and momentum are kind of the same. Isn't that what we thought? Do you think that? That's what I thought. However, the max drawdown is better with the simple MACD indicator, only 20 minus 29,161. And the win percentage is about the same as momentum. All right, these two are similar. See what I'm getting at? 61% versus momentum, 61%. The MACD does beat the market. Once again, an indicator beats the market as far as overall percentage gain from the 90s to now, right? But it's nowhere near the RSI, right? The RSI profit was about $30,000 higher and it had less drawdown. And you can go back to those exact numbers or just email me or leave a comment. I'm happy to share all of this, whatever you need, okay? Bottom line is this. We are learning that indicators do work, at least in this arena. They definitely beat the market. We've seen multiple ones, right? We've seen Stochastics, RSI, and MACD beat the market, right? Even the supposed bad ones, right? Beat the market. Momentum is pretty darn close to the market, right? But we're also learning that some indicators are better than others. If we keep apples to apples and keep everything the same, RSI is number one so far. Stochastic is number two. And the momentum indicators, momentum itself, and MACD fall behind. Isn't that interesting? That stuff like RSI and stochastics, which are pullbacks, right? Pullbacks, an RSI has to go down into oversold. Stochastics has to go down into oversold, and then we buy. Whereas momentum rises up and we buy, and MACD crosses up and we buy, right? Fascinating that the ones that get in on a pullback are showing much better numbers. Right. But as you have found out now in the past few weeks, some indicators make more profit, have less drawdown, and have a higher win rate. I mean, that's what I'm using to judge, right? If you like those sorts of things, I think you and I can agree that some indicators are better than others using those metrics. We can beat the market with indicators. That's awesome to know. But we should be smart and pick the ones that perform best, right? I mean, doesn't that make sense? Let's not use just any indicator. I mean, let's test them all, or let's test a bunch anyway. But right now, as we sit here today, we've tested 4 of them, and RSI is clearly ahead. So if you're thinking about building a trading system, of course, do your own testing, do your own work, but maybe start your research with RSI. At least that's what we're learning. All right. Latest updates, still on kajabinext.com. Please join the newsletter. Love to have you on board. Go to scottwelsh.me and just hit a button, sign up there. And there's contact information. If you want to see trade examples, I thought about it initially, but then I didn't want to bore you with something so simple. But if you do want to see a screenshot or something, happy to do that for you. Email me. On Twitter, and of course, you're on the YouTube channel now. That's it, everybody. Great being here as always, and we'll be back next week once again. Bye for now.